Ladies and gentlemen, good day and welcome to the Vishnu Chemicals Earnings Conference Call, hosted by Emkay Global Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Meet Vora from Emkay Global Financial Services Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Welcome to the earnings conference call of Vishnu Chemicals Limited for Q1 FY26. I would like to welcome the management and thank them for giving us this opportunity to host them. We have with us today Mr. Siddhartha Chirukuri, Joint Managing Director, and Mr. Hanuman Bansali, Vice President Finance. Before we begin this call, I would like to point out that the discussion during this call may contain forward-looking statements reflecting the company's current view of future events and their potential effect on Vishnu Chemicals' operating and financial performance. These statements involve uncertainties and risks which could cause actual results to differ. The company is under no obligation to provide subsequent updates to these forward-looking statements. I shall now hand over the call to the management for their opening remarks. Thank you, and over to you, Siddhartha.
Thank you, Meet. Good morning, everyone, and thank you for joining us today. Let me start today by providing a brief overview of the quarter gone by and how we navigated the external challenges during this period. Quarter one, while our year-on-year performance remained resilient, we witnessed a moderation in sequential performance, largely due to demand deferment arising from ongoing tariff uncertainties. The impact was more visible in export markets, where customers took a cautious approach, particularly in terms of inventory stocking for their key raw materials. This caution, coupled with subdued global manufacturing activity, we would say temporarily affected our order book and our order flow. Despite these headwinds, we continue to focus on margins and customer-first approach. Consolidated domestic export sales mix stood at 55-45 during the quarter. Our balanced presence across domestic and export markets gives us the flexibility that is valued in times like this. Ocean freight rates also surged between May and early June, driven by tariff-related developments and peaks, especially the peak season surcharge has been applied. But while freight costs have begun to ease since mid-June, we did experience an increase of 88 basis points in our shipping and forwarding costs sequentially. We are pleased to report our consolidated gross margin improved by 81 basis points year-on-year basis to close to 46%, and consolidated EBITDA margin remained stable at 16.1%. This is a direct result of operating discipline and flexibility we built into our business model over the years. Manufacturing remains our core focus, and we are continuously working to strengthen it moving forward to maintain our cost competitive position. In the quarter gone by, our consolidated manufacturing expense as a percentage of revenue declined by 100 basis points year-on-year to 6.2% in quarter one, driven by ongoing process improvement. We remain encouraged by the business development opportunities we are generating and expect to continue to capitalize on our pipeline to drive sustainable above-market growth. Though it's hard to predict, we are hopeful that pent-up demand will flow through the rest of the year as our portfolio of chemicals cannot be substituted. We believe that once there is a clarity on the tariff front, market stability is likely to return. To throw some light on the capex front, we are going to focus on completing the existing projects in hand, including the foray into strontium chemistry, and strategize our future investment in chromium and barium vertical once the clarity emerges post-tariff stabilization. Thank you. Now I hand it over to Mr. Hanuman to walk you through the financial highlights. Over to you, Hanuman.
Thank you, Mr. Siddharth, and good morning, everyone. Let me now share the financial highlights of the quarter Q1 FY26. On a consolidated basis, the company delivered operating revenues of 346.9 crores in Q1 FY26, compared to 338.9 crores in Q1 FY25, an increase of 2.4% on a year-on-year basis. The gross margins were resilient at 45.6% in Q1 FY26 compared to 44.8% in Q1 FY25. The absolute EBITDA in Q1 FY26 was 55.7 crores, an increase of 0.2% on a year-on-year basis. Q1 FY26 EBITDA margin was 16.1% compared to 16.4% in Q1 FY25. The company achieved a PAT of 32.2 crores in Q1 FY26 compared to 30.5 crores in Q1 FY25, an increase of 5.8% on a YoY basis. The PAT margin stood at 9.3% in Q1 FY26 compared to 9% in Q1 FY25. Some of the key highlights on the standalone front: the company witnessed improvement in gross margins and EBITDA margins during the quarter. As stated earlier, the focus on margins and customer-first approach helped the company achieve desired improvement of 470 basis points in gross margins in standalone business and 185 basis points improvement in EBITDA margins on a sequential basis. The company has a continuous track record of paying dividends. The board of Vishnu has recommended a dividend of 15% on the face value of 2 rupees per share, which is subject to shareholder approval at the upcoming AGM. Even when the macroeconomic conditions remain challenged, the team is executing well, highlighted by the positive inflection in our year-on-year metrics. We will continue to improve our competitiveness and efficiently deploy capital in value-accretive ROCE projects. On the South Africa acquisition, the statutory approvals and clearances are still in progress, and we will update you once we have clarity on the same. With this, I conclude my remarks. We can now commence the Q&A session. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question, sir. First of all, on the standalone side, just wanted to know what's the update on the pricing side from the chromium business. And obviously, I think everyone would be looking at the angle at how much we are exposed to the US side. So how much revenue we are getting from the standalone business as well as on the subsidiary Barium side also, if you can highlight. And the current scenario where the chromium products pricing are shaped up in context of the chrome ore prices.
Yeah, good afternoon, Mr. Rohit. I'll start off with your first question is how is the pricing environment? Pricing environment still remains quite resilient. We are not seeing the pressure on the pricing across barium and chromium value chain. Whereas you're talking about what is our exposure to US market. On a consolidated basis, our exposure is close to 12%. 12%. In that, 7 to 8% is about chrome and about 3-4% is barium. So just to give you an update, for our barium chemicals, there are no tariffs. It's totally exempted based on Annexure 2, so which is a very big positive. So we continue to grow our volumes in this particular value chain, which is barium chemicals. Chrome, we are, there is a tariff applied. Right now, it's close to 25%, plus 3.5, 28%. We are in constant touch with customers. So right now, things are still quite fluid at the moment, so I won't be able to comment. But we see the customers are still keen to look at our products and continue import, but it's still unclear at the moment.
Okay. And good to know that, barium is not there on the tariff side. And although we have only 3-4% as of now, so In order to, you can say, capitalize on this opportunity, how would be our approach and how big this could be going forward? As I think we already have decent demand for barium in the other markets, and we are doing good there. So how our capacities are shaped up, and in how's the utilization there, and how, if at all we are looking to expand our presence in the US on the barium side. Would that be with the current capacity itself?
Um, Just to correct a small thing over here, sales of Vishnu Chemicals on a consolidated basis from USA is about 7%. 5% of chromium sales comes from USA, and on the barium side, we have 12% contribution coming from USA. Over to Mr. Siddharth to answer the remaining part of the question.
So for the barium, I think, we are in constant touch with the customers. I think, we are trying to add more accounts as we move forward for both barium carbonate and barium sulfate. We definitely are going to see a good volume and value growth on that front. Again, in terms of our operating levels, we are currently operating at close to 80%, both the products, and we target to get to the 90% in this particular quarter as well.
Okay. And just one thing on the balance sheet side, I mean, how much would be the capex and debt number for us would be there for 26 and 27?
Hi, Mr. Rohit. On an immediate basis, the company is working to complete its capex in Vishnu Strontium Private Limited. Of this, 46 crores have been spent till 30th June 2025. And on the debt side, the company's net debt is about 250 crores as of 30th June 2025, which is close to about 0.25 times net debt to equity.
And this would be more or less in a similar range for next year also?
For the next year, it would be subject to the capex plan that the company would take, for which there would be more clarity and more details available once the tariff issue subsides and there is more stability in the market.
Got it. Okay, that's it from my side. I'll come back in queue. Thank you.
Thank you. We have our next question from the line of Ashish Khurana from Ang Capital. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. Sir, so on this barium side, basis what you confirmed, so there is no US tariff impact, but if sequentially I see both revenue and the gross margin, so there is I would say, a reasonable drop there. So if you could elaborate if, it is because of barium carbonate or the sulfate product or, domestic market, export market. Because before you commented on it, I thought it was primarily because of our US supplies to barium. But if that is not the case, so what is causing this impact?
Good morning. Thank you for your question. So on the barium side, first of all, let me highlight on the pricing front. The realization of nearly all the products in barium chemicals remained the same on a sequential basis, as we did not increase any prices during the quarter because there were already a lot of uncertainties around the macro factors. On the volume front, there was a decline of nearly about 10% in the production of PVS compared to previous quarter due to improvements and maintenance works carried out by the company. However, barium carbonate sales are on the rise, and we saw an increase of nearly 2% increase on a.
Okay, so the opportunity that opened up for us probably because I think some Georgia-based producer shut down. So that still continues, and we have those relationships and business with our US clients on barium carbonate, right?
That's right. That's right.
And on PBS, what kind of market share have we reached domestically? I think we were targeting around 70-80% market share. So where are we
We
now
are
on
pretty
that?
close to that. We are pretty close to that. Generally speaking, since the focus is on paint industry, normally in the monsoons it's relatively slow on that front. But it's not impacting our exports. We are trying to balance now. Generally, in the monsoons, the demand for either it could be a powder coating or a solvent day in place is relatively low. So there is some slowdown in the market on the paint side. However, this is kind of balanced by increasing our exports to the international market, the PVS at the moment.
Got it. Just a couple of more questions. So on barium gross margins, all the benefit that could have come from our Ramdas Minerals acquisition. So is that showing already, or there are like few basis points still to go in that?
You see, the EBITDA margins still remain robust. I mean, we are looking at close to 30%. Even last quarter is 29.1%, and that's going to continue to remain. There has been a volume impact because of maintenance, because of monsoon, slowdown in the paint industry, especially on account of monsoons. But we still remain quite positive overall. It could be domestic market or it also exports as we continue.
No, sir, I was asking about the backward integration benefit in gross margin. We acquired Ramdas Minerals, so that is now already fully.
That is already factored in. That is what I'm saying. It's already factored in, and our EBITDA margins are still at a level of close to 30% now on a consolidated basis when we combine Ramdas and barium subsidiary.
Okay. And lastly, sir, on chromium, especially global demand. So our Turkish company, peer company, in their commentary, highlighted a significant drop in volumes and also said that since the leather production is down, so there is a lot of chromium-based supply, chromium derivative supply in the market. But I think we probably are not that deep into leather, and we have like a diversified end use case. So how would the global demand for us for our chromium derivatives pan out in the near future?
That's a very good observation. I think this is something we have kind of forecasted a few years ago that this is the direction we want to take moving forward is to focus more on value-added products other than leather, which is chrome sulfate, and we are moving in that direction. It could be focusing on metal plating, wood preservative, and pigments and dyes, as well as chromium metal. So that is what we are going to focus on. It doesn't mean that we are going to do away with the leather business, because that's something we have those long-term relationships. I think it's a moment that this industry is going through a lower business cycle. And it will definitely come back. But given the flexible product mix, I think our exposure to that industry right now, in terms of sodium dichromate volumes to this derivative, is only 15 to 20% at the moment.
So for us, the global demand,
our volumes in chrome in the first quarter, in fact, even on and I cannot talk on a sequential basis, but on a year-on-year basis, there has been a volume growth as well as the value growth, if you can see. And even if you look at the sequential basis, it remains subdued in terms of volumes for chrome.
And on a sequential basis, there was a 500 BPS GM improvement, gross margin improvement. So that probably was because from the data I have, there was some softening in chrome prices. Is that correct?
To some extent, and also some better operating levels of the plant has given a better economies of scale. Our volumes have increased.
Got it. Thank you, Mr. Siddharth. Thank you, Mr. Bansal. All the best for the rest of the year. Thank you so much.
Thank you. We have our next question from the line of Apar Bansal from Panify Capital. Please go ahead.
Hi, good afternoon. Thank you for the opportunity. So I have a question regarding the growth top line, that in the earlier call you have guided for like 15 to 20%. So in the related uncertainties with the tariff, so when we can expect this growth in the year, And also my second question is regarding the strontium, which strontium carbonate capex. So please can you guide on this?
Good morning. So we are also looking at the markets right now, and our current performance is a true reflection of where we could, extend our capabilities to give a better performance on a year-on-year metrics. Talking about the guidance on a 10 to 15% levels, we had given a guidance on increase of volumes, but looking at the market uncertainty, it is very academic right now to talk about increase in top line at this juncture. Like everyone, even we are studying the market and talking to our export customers who are more cautious and resorting to tighter inventory cycles. But the good part is that this cannot remain like this forever, because the chemicals in which we operate are hard to substitute. So there is an expectation. I would not say we are completely relying on it, but there's an expectation that there will be a pent-up demand coming in the rest of the year, which is going to more or less cover up for whatever sequential decline we have seen in the first quarter. On the barium side, we don't see any challenges as such, both on the pricing front as well as the volume front. We are seeing very good momentum, and that is likely to continue. On the strontium front, the capex is underway, and on the strontium front, the capex is underway, and we expect the production to start sometime in the second quarter or early third quarter. It's a very exciting product. It's a new product, and we are going to be the only manufacturers of that in India. On the strontium side, would just like to add that it is very, very cost-effective alternative to rare earths. Strontium carbonate, provides very strong magnetic properties in comparison to other materials which are used to manufacture flexible and permanent magnets, which are in great demand right now. The prices of that have also increased substantially over the last 1 year due to the shortage of supply in the global markets. So introduction of that product will also potentially add to our top line in the remaining part of the year.
Okay, got it, sir. So just to add to on this, please confirm that as per the expectations, like for the next 2 years, the key growth drivers could be this strontium carbonate project, or if not, then what could be the, like, given the market uncertainties right now, what could be the key growth drivers? Please.
We are working on other interesting, backward integration project. I mean, right now, we were not able to, share that information since it's an R&D phase, but that will definitely be another growth lever for Vishnu Chemicals. And also strontium carbonate, we are seeing a good demand, especially coming out of Asia and being the only producer. And in Mexico, one of the facilities which was manufacturing strontium carbonate had a fire accident. So close to 24,000 tons of product is out of the market. So there's definitely gap which we can fill. So the launch is going to happen at the right time.
Okay, thank you, sir.
Thank you.
Thank you. We have our next question from the line of Jay Bharat Trivedi from InCred AMC. Please go ahead.
Hello, sir. Am I audible?
Yes,
Yeah.
Jay, we can hear you.
Yeah. Thanks for the opportunity. So my first question is, could you quantify what is the capacity utilization for Q1? Or alternatively, you can also say what was the revenue loss due to deferment in chrome ore, and 10% is what you have said for PB due to maintenance. So yeah, can you say something on that?
Good morning. On the capacity side, like to highlight, as mentioned previously in the call, capacity utilization is still very good, both on the chromium side as well as the barium side. Um, Last year, our capacity utilization in chromium chemicals was in excess of 80%, and we continue to surpass this target this year itself. Even despite the tariff uncertainty, we are very confident of increasing or delivering a 10% growth in volumes due to substantial improvements that we have done in our plants, which is yielding very good yields at lower consumption of raw material. And
Okay,
on the
sir.
barium front, I would like to add that compared to mid-60s capacity utilization that we achieved in FY24, our current utilization gives us the momentum to achieve at least 80% to 82% by the end of this year. So we are going to see an increase in volume growth as well as value growth in the barium vertical through the year.
Okay, sure, sir. And my second question is on the R&D front. You explained, but the new products that we are working on or all the engineering processes that we are trying to optimize, how do we account for them? Where are they expensed off or are they capitalized?
They are fully expensed. They are fully expensed. All our R&D expenditure is expensed on a monthly basis in our P&L account, and there's no capitalization of the same.
Sir, so when I read your annual report, categorically there is no mention of any R&D expense. So what will be the expense as a percentage of sale, if you could tell me?
Categorically, there is no line item on R&D expenditure because it is outsourced to an external entity. It is outsourced to a third party. That is why it's not an in-house R&D facility. And that's the reason why it is expensed in the current heads of the P&L. And it is close to about 0.5% of our total sales, consolidated sales of the company.
Okay, thank you so much, sir. Those were my questions. Thank you and all the best, sir.
Thank you.
Thank you. We have our next question from the line of Dhruv Shah from Ambika FinCap. Please go ahead.
Hi, Siddharth and Hanuman. I have two questions. One is on your Stoichum Chemicals commissioning. It has been pushed by almost now 2 quarters, right? Because it was supposed to start of Q1. Now you guys are saying that it will start in Q3. Why is that a delay of almost 2 quarters there?
Yeah. Hi, Dhruv, this is Siddharth with you. So the trial runs are going on at the moment as we speak. We're getting close to actually start our commercial sales probably towards the end of this quarter itself. So we are in August. So I mean, the trial runs are going on as we speak. So September is when we would actually the commercial sale will happen, and we'll see some consistent volume from October. That's the reason we are saying it's going to be quarter 3.
So that we are putting up how big is our plant?
I think we already conveyed before close to 12,000 tons of strontium carbonate per annum.
Right. And so the next question is on your mine. Is there any update which you can share with us? Because we are already in August. I guess you had given a guidance of by September you should see some light out there. So can you just give us some color on the mine acquisition?
On the mine side, the update remains same as last quarter. There is no new development on that front. We're still awaiting the statutory approvals, which will give us which will lead to the handover of the mine and closure of the acquisition. So this is the only update that we have right now on the mine front. As per our assessment, we had anticipated 1 year from the time of signing of the agreements last year in November 2024. So we are expecting the approvals to come on or before November 2025. That is 12 months from the date of signing the definitive agreements.
Okay. Okay, fair point. And all the best for future quarters. Thank you so much.
Thank you. Thank you, Mr. Dhruv.
Thank you. We have our next question from the line of Bharat Shah from Ask Investment Managers. Please go ahead.
Yeah, hi. Tough times, but I couldn't properly get the details about how much is the US exposure. So on barium side, what I understood was there is no duty and it is fully exempt. On chrome side, there is a 25 plus 3, 28% duty applied. So how much of total turnover has been to America on barium and on chromes?
So on a consolidated.
Good morning. Good morning. Good morning, Mr. Bharat.
Yeah, good
I'd like
afternoon.
to answer the first part of your question. Yes. Good afternoon. So I'd like to answer the first part of your question. 5% of our sales in chromium chemicals comes from USA, and 12% of our barium chemical sales comes from USA. That totals to about 10% on the consolidated basis. Sales comes from USA. I now request Mr. Siddharth to answer the second part of the
Just
question.
one second. You say 12% of total barium sales out of US and 5% of chrome out of US. And that the two together is 10% of total turnover last year.
That's right. 10
So
to 12%.
last year we did about 1,450 crores. So roughly 150 odd crore has been exports to US.
Last year we did 1,446 crores, of which nearly 60 crores turnover came from USA, which was 3.5% of standalone sales. And on the barium front, nearly 44 crores came from USA, which is about 12% of our barium sales.
Sorry, Anumant, I'm still confused. Last year our consolidated turnover was 1,450. Right?
1,446 crores.
Yeah, sure. 1,446.
Yes.
So exactly how much has been barium exports to America out of that, and how much is exactly chrome exports to America?
Last year, 60 crores were chrome exports to America and 44 were barium exports to America.
44 and 60. So 104. So of the turnover, consolidated turnover, that is more like 7.5%, not 10%.
No, it is not 10%. It is 7%.
But I thought I heard you saying 10% of consolidated turnover came from America.
No. I'll repeat. On a consolidated basis, we have exposure to America 7%. On chromium front, it is 3.5% last year. On an average, it's been about 3.5 to 5%. Last year it was 3.5%, which is 60 crores of turnover came from America. And on barium front, 12% of our barium sales came from America, which was about 44 crores last year.
Okay. So on a console basis, about 7% of the turnover came from America. Of which barium sales is not a problem, as it is duty exempt. What is in trouble is the chrome exports, where duty is applied.
It's very early to say right now whether, because chromium on the other side, it's not a very big market for us in USA. And we were not anticipating any larger market share in the near term. So we have to see from a holistic point of view, while USA is not the only market that will be impacted due to these tariffs, I think it will also have a ripple effect to other markets. So, for instance, like USA has imposed tariffs on China. China also purchases from South America, and we also sell to South America. So there is always a correlation between the tariffs and the other countries apart from USA.
Sure.
But from a standalone USA point of view, chromium has been a small market for us because there is a dormant player over there, active player over there, which is just like Vishnu has a market share of nearly 60% in domestic markets in India. They have a market share of nearly 60 to 70% in USA.
Right. And so far on the chromium exports to America, the duty of that 28%, who is bearing? Are we bearing a part of it and the other part the importer is bearing? How is it working?
On the duty front, it's a very good question. It's very early to say anything right now.
So as of now, for the shipment, Hanuman, let me take it. As of now, for the shipments which have arrived or which are arriving, there's a 10% duty. So far, I mean, the customer is bearing all that duty. But moving forward, people are talking about 25% and maybe 50% now. So things are very fluid at the moment. So we are still kind of in discussions and to see how things will pan out in this month. But as of now, the customers are bearing that additional. Before in the past, it was about 3.6%, and there is an additional 10%, which was a baseline tariff for the material which has been shipped or which has been arriving. So that's pretty much the customer is bearing. The situation now is a little different than a few weeks ago, so we are still in discussions.
Naturally. I mean, given the kind of confusion the men sitting in White House has created, that's an understandable one. Okay, and in the first quarter, how much have we actually exported chrome to America, and how much of barium?
Sorry, please repeat your question.
First quarter of current year, how much has been exports to US on chrome and barium?
I mean, it won't be. I mean, I'm not sure if you're talking on the volumes and value. I mean, I won't be. I don't have those numbers.
I'm talking of.
I have to see maybe $2 or $3 million close to, but I need to take a look at it. I don't have those exact numbers at the moment.
Okay. So, given the fact that America exposure still is rather low, I mean, it is not insignificant, but it is somewhat low. Where is this even in presentation as well as on the call right now, the swirling worries about tariff uncertainty. Therefore,
so directly or indirectly, we may not be, like you rightly observed, we are not like that. I mean, it's not insignificant and not too significant. So it's a 5% of our chrome business and close to 4% of our barium business. But the thing is that, like, we are exporting to over 65 countries. So, there's something called ripple effect. I mean, where ideally the consumer remains America, right? So how the other end user industry, how our clients in Vietnam or how our clients in Europe or Africa or South Korea, Japan, and because ideally, there's a good share of their, final product going into America. So how are they impacted? So that's also impacting us.
No, obviously. Second level effects are always, they appear hidden, but they are real. And it is not just the primary effects. So I appreciate and understand what you are saying. So what exactly you are trying to convey is that it is the ripple effect of the others eventually selling to America, where there is confusion and there is a level of uncertainty which is prevalent.
Sorry?
And basically what you're trying to say is
That's
that
right.
the
That's
direct
right.
exposure to America is not as much concern, but the ripple effect through the other buyers in other countries who eventually may be selling to America, they are going through their own challenges, and that is reflected in the environment of uncertainty and diffidence which is prevailing.
So far, you're right. So far, domestic market remains resilient in spite of this, tariff effect. So we hope that would continue because the domestic demand and generally the consumer sentiment still remain positive in India. I hope that would continue and we will be focusing more on the domestic market in general moving forward. Perhaps the share would be 60-40, but still there'll be some portion of exports, on a whole from Vishnu Chem.
But on that domestic part, actually, many industries are significant exporters to America. Leather being one, your ceramics, etc., also being another one. So many of these industries, through the second level effect, again will be impacted, no? Because some of them are exporting to America.
Not really, because for example, our sodium dichromate mainly going into pharma for us, like a painkiller. So these are, there is no pharma as of now. It's exempted. There is no duty on pharmaceuticals. Okay.
But tannery, ceramics.
Leather predominantly is going to China because we are not doing the final product here. It could be automotive leather or it could be upholstery, which is furniture or shoes. I think it's primarily going to China, Asian countries, partly to US, but majorly to the Asian countries. And India also has slowly become a consumer. And like I updated to another gentleman saying that our exposure to leather is coming down year-on-year basis. So it's more towards pharma, pigments, electroplating and pigments and dyes.
Sure. Just one last thing. Therefore, what essentially the message of the dialogue so far is in that global uncertainty is what it is, and there is precious little we can do about it. But we are tightening whatever we need to do and improving our own innards so that we are in a good shape, whether on the cost side, on product mix side, innovation and whatever. But will we deal with the situation internally, externally is something beyond our control, and overall we should still be able to prevail, especially once the acquisition of the mine is completed. I think it will give a significant leg up.
You're right, and we still remain positive. I think there's a lot of work happening, and especially on the backward integration side with the chrome ore going to come, by early next year. I think that's going to further improve our cost position in terms of the chrome metal plan. What we have also will play a significant role with the kind of product mix what we are going to look at. So yeah. But barium side, as things remain quite positive. We still are maintaining close to 30% EBITDA, and that's going to continue, perhaps even improve. That's how I look at it.
Sure. And mining acquisition is only timing issue. Is happening is not is an issue, right?
Hanuman, you would like to comment?
Yes,
Hanuman?
that's correct. The acquisition. Yes, that's correct, Mr. Bharat. It's the application is pending with the government for regulatory approvals and clearances. The acquisition will be completed as soon as we get the government approval, and it's only a matter of time. We are anticipating it could happen anywhere in the third quarter of this financial year, probably on or before November 2025.
Okay. But happening of that is certain. Timing is only what we are discussing.
That's correct. That's correct.
Oh, okay. Thank you.
Thank you.
Thank you.
We have our next question from the line of Miten Shah, an individual investor. Please go ahead.
Yeah. So thanks for giving me the opportunity. So I would just like to know, historically, what has been the demand for chromium and barium compounds? In other words, I would like to say in what way it is growing in terms of CAGR, every year. I mean, what is the demand increase or pent up that you're seeing in terms of CAGR? Both domestic as well as globally.
Good morning. Good morning, Good afternoon, Mr. Miten.
Yeah.
Thank you for your question. Chromium chemicals has witnessed a upsurge in demand starting 2017-2018, and we have seen an increase in the consumption of chromium chemicals across the sectors, including electroplating, pharmaceuticals, wood preservatives, automobile industry, leather industry on the furniture side, upholstery side, as well as the automotive side. As well as we are seeing new derivatives of chromium chemicals being implemented in areas such as coating surfaces, pigments, and dyes that do not fade, pigments that can last the test of time. And all these new innovations have led to an upsurge in the consumption of chromium chemicals globally. It is also imperative to note that chromium has been very hard to substitute, and by nature it does not rust. And
Correct.
with its ability to be resistant to corrosion, it finds its application in various defense as well as aerospace applications. Whereby I would just like to share an example. Say, an Airbus engine contains close to about 250 kgs of pure chrome metal in it, which is close to about 4 times the amount of chrome oxide that we manufacture and sell at our product.
Correct.
So these are some of the applications which have picked up over the last 8 to 9 years, and we are seeing that the CAGR is only bound to improve with the diversity the chrome chemicals offers to the application.
Yeah, understood. So what I was essentially asking is, how much is it growing every year? I mean, since like you said, from 2017-18, the application has been increasing substantially. So what is the demand that you're seeing there in terms of CAGR? Say suppose, 2017-18, it grew say by about 7% as compared to previous year. The next year, say, it grew by about 5% or 6%. So what is it that you're seeing in terms of CAGR, the growth year on year, based on history?
In the range of 4.5 to 5.5%.
Okay, that is for the chromium or for both the chromium and barium?
Only the chromium part of the business.
Okay, and how about barium? How is that going? In terms of
on the barium front, we are seeing a CAGR growth of close to about 5.5 to 6.5%.
Okay, this you're talking locally or globally? Globally. Okay. By any chance, or do we have an indicative TAM of this market? Say chromium, what would be the TAM, and for barium, what would be the TAM? Indicative.
We can share it. Probably we can connect offline and we can share more data on the market and the industry side of both the verticals that you operate at.
Fair enough. Okay. The only next question would be like, what is the marginal difference, between our local consumption and our exports? I mean, the marginal difference in terms of margins.
In terms of margin, it's very flexible. Of course, export realizations are slightly better compared to domestic realizations, but there are pros in both the areas. Domestic gives us a better edge in collections and having a low receivables. And in domestic market, we have a payment term of 1 month or less than 1 month. And in some cases, it's even on cash and carry basis, which is advance payment, and then the material is supplied to the customer. But in export market, where the margins are slightly better, like I said, about 1 to 1.5%, and in certain categories even better. But there the receivable days extend beyond 45 days, extending about 60 to 65 days.
Okay. Fine. And what was the as on date cash on books?
As on date, the cash on books, we cannot report it because the balance sheet is not shared. But it is in line with 31st March 2025 that we had reported.
Roughly around 900 crore. Sorry, is it roughly around 900 odd crores? I mean, I think that is what was indicated.
No, not 900. As of 31st March, we had reported a cash on books of 81.7 crores. So it is nearly in line of that.
81.7 crores.
That's right.
Am I?
That was the cash reported on our books as of 31st March.
Okay. And final question, sorry.
Sorry to interrupt you, Mr. Mithun.
Yeah.
May we please request you to rejoin the queue?
Sure. Okay. Thanks a lot for giving the opportunity. Wish you all the best.
Thank you.
Thank you very much.
We have our next question from the line of Parth Modi from Equirus Wealth. Please go ahead.
Hi, good afternoon, sir. So my question is regarding the chromium business. How much do we sell as standalone SDC, like the primary chemical? How much of volume we sell of it, and how much of SDC is captively consumed for manufacturing the derivative products?
Thank you very much. Thank you for your question. We have a capacity of nearly 80,000 tons of sodium dichromate, of which nearly 30 to 33% is sold as sodium dichromate in the market. Balance 67% of sodium dichromate is converted into derivatives as per the demand requirement.
Okay. And how much will be in value terms, like for FY25, how much revenue was contributed from derivative?
From the derivatives, the revenue contribution was close to about 70 odd %.
Of the chromium business?
Of the chromium business.
And do we have any margin differential, like what margins do we make in derivative and what in primary?
Thank you again for this good question, because it's not that the derivatives add more margins to the business and vice versa. It gives us the flexibility to deliver the product in the market where there is demand. So if we find a demand of only sodium dichromate, we can produce sodium dichromate and sell as it is in the market. But that's only a best case scenario. But in the realistic case, the demand shifts from one application to another application, one customer segment to another customer segment. And the range of derivatives gives us the flexibility to manufacture the product as per the requirement of the customer.
Okay. Got it. Thank you, sir. That will be all.
Thank you.
Thank you. Ladies and gentlemen, that would be the last question for today, and I now hand the conference over to the management for closing comments.
Thank you everyone for your valuable time. With this, we conclude our Q1 FY26 conference call. I would like to add that our results, earnings release, and the investor presentation have been uploaded on the stock exchanges and the company's website. If you have any further questions, feel free to reach out to us on investors@vishnuchemicals.com. Thank you for your valuable time. That's all from us now.
Thank you very much, sir. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share, and subscribe to Concall India for latest upcoming Concall.